Good morning. In this presentation, we are going to see how we can trade in MCX crude oil today. Before looking into that, let us see what happened yesterday and what we expected yesterday. Yesterday, crude oil market opened near 4,960. You can see this opening. This black color box indicates the price opening. So, yesterday crude market opened around 4,960, which is very near to the previous day's closing. You can see the previous day's closing is also around 4,960. Always this vertical dotted lines, you can see these two dotted vertical dotted lines that indicates the price closing and opening for the respective days, and this blue color box that indicates the over high and low for the respective days. So after the price opening around this zone, what we expected is that we expected crude to continue its downtrend. That is, on the previous day, if you can see that crude was dropping from 5,120 with around 5,110 to 5,120 it was dropping, and it has come down till 4,960. So yesterday also we expected crude to continue its downtrend, targeting some major key resistance zones. That is, we expected the market to continue its downtrend till 5,060 and also even till 5,120, the same resistance zone which we followed earlier. So let us see what happened after that. After the price opening around this 4,960, you can see the market came down and tested the previous day's low. After the price opening, initially it has dropped down. You can see this after the price opening, there is red color candlestick. So it came down and tested the previous day's low, and it was trying to stay above the previous day's low. Let us see what happened after that. The market just showed some pullback that happens after some huge drop, and it was trying to consolidate around 4,980. You can see that the market was consolidating around 4,980, and every single candlestick represents 7 minutes, which means that you can see how many candlesticks we have around the zone. And there was a huge consolidation. And also one thing we should note, yesterday we had crude oil inventory report because of the Memorial Day holiday in US. We got this news only on Thursday 8:30 p.m. So we should wait for that news also. So let us see what's happening around 4,980. The market is trying to break and trying to make some support around 4,960. So let us see what happened after that. The market is consolidating here for a long time, and at last the market was successful in breaking this 4,960. And again now it is acting as a resistance. This 4,960 should act as a resistance because it was broken twice and it acted as a resistance, and you can see the level of selling it had. So the market was consolidating, and after that it is coming down and it is tested. You can see the 4,920 also. It has even tested this 4,920, and it was a very huge drop after that in the later session after the inventory report also. So what we are saying is that after the price opening, it showed some pullback and a failure to break this long consolidation. You can see it is a very long consolidation. Failure to sustain above 4,980 pushed the market down to test the low again, and this 4,960 was broken. And even then the market provided an opportunity. You can see this zone, you can concentrate on this zone which was created on the previous day. The market was struggling to move higher, and the market was struggling to move break this 4,980, and a failure. You can see even a drop. After this drop, the market just bounced back and tried to stay above 4,960. Again a failure here, pushed the market down, and even it came down till 4,920, which is a very major support in crude market, and that was also broken. You can see even at every break in the support zones, it is providing another opportunity to take this as a resistance. Now it was 4,920 provided a strong resistance that pushed the market down till 4,874. So that was the low that was created yesterday, and from there it showed some bounce back again to 4,920. And it tried to clear and test the price action. You can see that it was you can see always this happens after a very huge drop. You can always expect some bounce back, but that it doesn't indicate a trend reversal. You can always note that sometimes it may happen, you can show some bounce back, and sometimes it can hurt you. So always we don't follow this practice of buying against the trend, or if it is a falling market, ever and never try to catch a falling knife. It is like a falling knife. If you are going to catch it, surely it's going to hurt you. So what happened yesterday is that crude market was completely dominated by the sellers. So yesterday crude market was completely dominated by the seller, and if we compare the OHLC, that is open, high, low and close, the closing is well below the previous day's price opening, and also it has created a new low, and the high is well within the previous day's price range, and it is also near this low. So you can very well see that yesterday was completely dominated by the sellers, and also today we are expecting crude oil to open more or less around 4,890 to 900, and it may also even open lower just based upon the currency value. So rupee value is playing an important role nowadays in fixing commodity prices. So rupee staying above 56. So if it is because if we are following NYMEX prices, we can very well, everybody knows that crude is trading at $86. So that is what we expected in NYMEX. So if you are continuously watching our presentation, that is what we expected. After a break down around $90, we expected the market to test $86, and the next zone in NYMEX is around $82. So it is, if you are continuously, if you are a crude trader for years, you may know that crude always moves like that. So if the trend continues, you can very well expect $82 also. So what we can do is that since the stop loss range, we know the trend is going to be lower, and also we need to know the stop loss and the target zones. Then we can apply our money management techniques. And also today is the end of this week, which means after gaining some huge profits, it is our responsibility to protect our profit and also prepare ourselves for the next week. So what are the possible things we can do is that if the price is opening around 4,480 to 90 around the zone, the stop loss zone is still going to be 5,060. So you can see that level of stop loss. The stop loss zone has increased to more than 150 points. So it is coming around a single lot. It comes around 15,000 rupees point stop loss. But there is no other option other than this. Just to target the key resistance zone of 4,920 and 4,960. Whenever the market is in the with the trend, it is always good to have sufficient funds in your trading account, so that we can apply various trading strategies. Just because if you are going to place, there can be a pullback. Why we are saying the stop loss zone is, we are insisting on the higher stop loss zone, is that after a huge drop around 200 to 250 points, there is always a tendency there will be some bounce back. So if you place anything, if the market is bouncing back like what happened yesterday at the later night session, you can very well notice that that can trigger your 5 or 20 50 point stop loss very easily. So unless until we need to be very clear, and we need to have some sufficient funds. If you are a conservative trader, and if you don't have sufficient funds, if you are trading with minimum margins, then what you can do is that wait for the market to another consolidation, because it is always like what we said in our earlier presentations at the beginning of this week on Wednesday and Tuesday. If you go that consolidation market is a good opportunity to pick the trend. If we can pick the trend, so we are targeting, you can see on Monday, Tuesday, Wednesday, we were targeting 5,120 and 5,100 zone. So that is a zone that the market was consolidating for 2 weeks around that zone. After breaking the zone, we are going to make it bigger. So what we can do is that market will provide you an opportunity. Don't get carried away. This is for conservative traders. So market will provide you, since the stop loss zone is higher, you need to average till that zone. There is no point in floating your position, having some buy position and floating your position till 5,060. You need to average at key resistance zone, and we need to book profit for the average lots at regular time intervals to protect our profit and also to maximize our profit. So that is how the trading goes in commodities and in any financial instruments. So what we can expect is that today also we can expect the market to continue its downtrend, and the target zones are 4,860 and 4,820, which can be the major support in crude market. So all we need to do is that we need to, and today also in the evening session we have some news around 6 and 7:30 p.m. So that can also put some volatility into the crude market. And crude please go with the trend. There is always a tendency for all the traders. So many of my clients are also doing this to buy at after the price drop of around 100 200 points. They keep buying. There is a normal tendency, but we don't trade against the trend. We always say that don't bet against the trend. We keep on saying this again and again, so that you won't do that mistake again. So please stay with the trend. If you are not comfortable with the trend, just wait for the market to for another consolidation, because always the market consolidates. It will provide us an ample opportunity for trading. If you have sufficient funds, make use of the trend at the maximum, so that whenever there is an opportunity, there are two things we should make use of it. If you have sufficient funds in your account, please make use of the trend, and we can expect the crude to continue its downtrend for today also. So let us see what's going to happen during the trading session, and thanks a lot for all your support and watching our video. Take care. Happy trading. Bye.